Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
If I'm a directional trader and I think the market may give me a huge bang for my buck, and I have significant reason to look for a significant move in the market, then I would probably go with an outright long call, an aggressive strategy, just an outright long call. And so it's important to understand identifying risk and reward parameters. Options can certainly do that for you. So you have to have identify an opportunity and pick a market. So you have that with the euro currency. Then you have to have a trading vehicle that's going to allow you to get in and out, and you have that through ISE. Now you got some seasonalities. What other tools can we apply? Well, one of my tools that I use is Pivot Point, and I know some of you have heard of my stuff before, or maybe you've come on to ISE's presentations and you've seen my past stuff, but I think it's very important, and it relies on what's going on right now in the market, because I want to show that pivot points still have a very accurate way of showing us a guide of price potential highs and lows in the market, and it just is an amazing tool. I think that a lot of people get wrapped up in the day-to-day day trading, or maybe they get wrapped up in just hourly and miss the whole point. With pivots, you need to use multiple time frames, and the most important time frame to start off with is a monthly time frame. Next to that is weekly, and I'll show you why in just a second. There is a mathematical formula. Pivot points are not old chart lows and old chart highs. That would be a pivotal point on a chart. Pivot point analysis is based off a mathematical calculation, and here is the formula so that you know it truly does exist. Whereas if you take the high, the low, the close, the sum divided by 3, you got the pivot point. You take the pivot point times 2, subtract the low, you get your first resistance. You take the pivot plus the high, subtract out the low, you get your second resistance. Pivot times 2, subtract the high, you get your first support. Pivot minus the high, add back the low, get S2. Monotonous, tedious, there's no chance in heck I would ever do that again by hand like I used to back in the 80s. So thank God for computer programs. Now, again, remember I told you there's all types of new programs out there and new things. People came out and included a newer formula and added an R3 and an S3. And that means a third predicted resistance and a third predicted support. What I find interesting is that if the market's bullish, then I'm really looking, and I'll know well in advance that if we take out the lows or give me some other clues, I don't need S3 on my screen. So there's a way to use pivot analysis, and there's a way not to. And I've discovered, and that's what my work is truly unique, because I've got a way of filtering out a lot of these numbers. I mean, if you think about it, you have 13 levels on a daily basis, 13 levels on a weekly, 13 levels on a monthly. You would have 39 lines going across your screen every day. That's 13. If I was bullish in the market, and I think that market's going to go in an uptrend, then I probably would say we'll probably go here and probably be here for the next time period. And so that should be somewhere around the pivot to S1 up to R2. So if I'm bullish, I'm looking for S1 to R2 as my target. Again, look at this. If this is a given day, the market, what this bar chart signifies is that the market closes above the open, right? This represents the high. This represents the low. If the market's bullish, then I'm going to expect a higher high and a higher low. So if that's the case, then I would pick S1 to R2 to give me my lead or expectation of what the reality is of the market making an established range in a given time period. Very rarely do we see markets just blast off uncontrollably or completely break down without any lapse or pause in time. So when we use pivots and I use my filtering method, I have a way of being able to determine whether the market's bullish or bearish, and if bullish, then I use pivots by filtering out and giving me a target of R2 to S1. How does that help me? Because if I'm long a market, maybe I'm long from a prior low down here, and if I have a predicted resistance in a bullish time frame, then I could say, gee, if the market gets up to that level in this point in time, then I'm going to want to do what? Take a profit or get out of some of my position. And if I'm using options, I'm able to put more money in the game than, or if I'm looking at a swing trade, or if I'm looking at more of a position trade, with more comfortability. And that's speaking for myself. I mean, to put down on a euro currency position in a spot FX or a futures where every 1 point move, I mean, let's face it, if the market goes from 155 to 156 in the euro currency, in the futures, that's a $1,250 move per contract. And a margin on a futures contract is less than $2,200, unless they changed the margin recently, and they may just do that due to increased volatility. In the spot Forex, I think you can trade a one lot, by opening an account on a credit card, for gosh sakes, and you can have $500 in an account. How can you survive that kind of move? You won't. They'll blow you out. So excess leverage can be detrimental. And when you're putting on a big position, having big fluctuations in the market can play with your head. You get a little bit of nervous wrack there. So with options, I can survive some periods of volatility if I know I'm in the seasonally right period of time to be short. I can buy some puts that give me some time frame and then let the trade mature. And as the trade starts to mature and shows me signs that I'm right, and I can start to profit, and it starts to maybe trade near, some decent profit targets, now I can start to exit a trade. That's called trading a plan. So options have a lot to helping your mindset, number one. If you've got a problem, a confidence problem, if you've got a problem sticking with winners, using options may be an avenue, and that's what I teach people, properly how to use options. I mean, obviously, if you're going to do a futures contract, you don't buy one option for $200 and expect to be a millionaire, right? You have to have proper option selection, strikes using deltas and a couple other little things that we teach. But at nationalfutures.com, what I like to show people is, you have to have some type of understanding of what the condition of the market is in, bullish, bearish, uptrend, downtrend, or sideways. Then with that information, you can develop a trading plan. With that, I need to understand what my potential profit objective is and what my risk factor is. And pivots really can help do that. On the inverse of the bullish side, let's take a look at the bearish side. If the market opens here and closes there, and we're closing closer to the low, from a technical aspect, this is more of giving me of a bearish indication, especially if we were in an established downtrend. So if that's the case, I would look for that trend to continue. The neat thing about pivot points is that they are predictive in nature, meaning I'm taking yesterday's high, low, and close, throwing it in to give me tomorrow's potential range today. I'm getting an idea, an insight of what tomorrow might do. So therefore, if tomorrow is going to still be bearish, R1 down to S2. So that would give me an area here. So if I'm short from, say, this level, I have a potential profit objective down here. Now I can start looking at some theoreticals and say, hey, if actual prices trade there, what would my option be worth? I think I'll put an offer in to liquidate my put. So now you're being a market maker. And you're not reacting after the fact. You're being proactive. And so pivots can help you do that as well. And that's a very important aspect. A lot of people trade options, and they don't put bids and offers in the market. You can be a market maker. If you have an option position on and you want to lighten your load, liquidate your position, we call it, or I call it, go fish. Put an offer in the market to liquidate your position or partial position at what a theoretical value of the market might be if prices get to a specific level.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.